Good morning, traders, and happy Sunday. Even though it is Friday afternoon, the market just closed, and this is just an update to my ETF swing trades with SPLG and ARKK. You may or may not know that I am swinging those with a Chase account, not my Webull account, because I like to keep things separate so that when I show you my P&L for my day trading, you know that it's only coming from day trading. So this is a small swing trading. I would call it an experimental or learning account. But I started with $500 at the beginning of the year. Well, somewhere in January, I opened this account, and then there were no trades for me to take until February. So that was when the trading really began, and I'm up 5% unrealized right now. But there's no way that this account is going to drop below 515 at this point, at least with these two current trades, and I'll explain why. But there's no telling what happens after that with any future trades. So the one thing I would just want to say is that any type of banking investing is not really a great way to go unless it's just out of pure convenience like this is for me. But if you are really serious about swing trading, then I would suggest, doing it with Webull. Would be ideal. But if you want to keep things separate like I do and you do day trading with Webull, then look for some other commission-free brokerage and use them, because this is convenient because I already have accounts with Chase, but I think you get the idea at this point. So basically, I'm in these two trades, and this is all you get as far as information goes from Chase about them. And I've been in and out of them as my plan has told me, and I'll show you what that means on Webull, because at least on Webull, we can look at some candlestick charts and see what's going on. So I think my first entry on SPLG was back here, and then I would get out each time that it hits the 50 MA. So the first trade was for a small profit. The second trade was for a smaller loss. Third trade, a profit. And now I'm in the fourth trade. And right now it's made this huge move, but SPLG moves with like a 1-to-1 ratio against the SPY. And that's not such a great thing because you can't capitalize on the movement because both of these products move very slowly. Spxl is the kind of solution to that because it's a 3 times leveraged ETF. The last time I tried to enter a trade on Spxl with Chase, it wouldn't allow me to because it claimed that those products are too risky. Obviously I understand the risks involved with trading and 3 times ETFs. So hopefully that changes in the future. And next time I'm stopped out of SPLG, I will try to enter on SPXL through Chase and see if I can get away with it next time. But anyway, that would be my recommendation if you want to trade something that follows the S&P 500 or the SPY. SPXL is a superior product to SPLG as long as you understand the risks of trading a 3 times leverage ETF. So what can happen here in the very near future is that based on what has previously happened, doesn't mean it's going to happen again. I drew some lines from the peak here down to the 50 MA. Same thing over here down to the 50 MA. I think I ignored this one. And then I did one back here, and then I kind of averaged them out. So 2 of the lines basically overlapped, and one of them was back here, and then the average is over here. So mathematically, this is the most likely scenario, but the stock market doesn't follow mathematical rules. Even though we like to use mathematical rules to try to predict things, it's not really a great way to go. It's best to just kind of have a plan and stick to the plan. And the plan should make sense from a risk management perspective more so than in that sense, it is a little bit of math involved because a good risk management would be like a 2-to-1 profit to loss ratio, something like that. For me, with the ETF swing trades, I generally follow the indicators just because they're longer term trades. I don't like to use indicators for day trading. But with these longer term swing trades, I find them helpful. As you can see, the SPY, the last time that it broke out after coming down below the 50 MA, it made this huge, that wasn't the last time, but over here when it did that, it made this huge parallel movement against the 50 MA and came down here and stopped out at this level, and you would have had a really nice increase or profit if you got in basically at the break of this candle here. Get in over here and then get out the next time it touches the 50 MA. And that's what I'm trying to do here with these SPLG trades, because this thing follows the SPY and follows the S&P 500, so it makes the exact same moves. Here's that same move on SPLG. But unfortunately, I wasn't swing trading back then, and the first time I swing traded this was back here, and all of a sudden it started to do these little kind of like rabbit bounce moves is what it looks like to me. But anyway, at least so far, I think I'm green overall on these SPL swings, and I'm definitely going to be green on this trade because worst case scenario, I will end up about 30 cents per share in profit, and then the high end of this just average, it could of course go way higher than this, is about 50 cents, and then the average of all three of those lines is over here at 46, I would say about 36. And so that's about a 45-cent profit, give or take. But if this thing starts to make another parallel move where it's moving kind of proportional to the 50 MA, who knows where this thing could end up. So the nice thing is that worst case scenario, I'm still green. And then if the best case scenario, this thing could really take off and I could be in this trade for a long time, which would be ideal. Now with ARKK, a little bit different story there. There was lots of chopping around. I got in for my first swing on this trade back here, and then I let the price break above the 100 MA. I'm kind of doing the same thing I was planning with SPLG, but using the 100 MA. And I stopped out here. Then I got back. So that was a winning trade. That was a pretty nice little trade too, because the move was about $10, I think, of 119 up to 124. No, about $5 per share. Still pretty nice little move there in just a few days. And then I got back in when this candle made a new high, or broke above the high of this candle. But then I was stopped out over here for a very small loss. And then I did the same thing because that's what my plan tells me to do. I got back in when this candle broke above this one, and then took a little bit larger loss. My stop loss, since this was trading below the 100 MA, my stop loss was the low of this candle, so I stopped out over here on this candle. And then I think at that point I was pretty much red on all my ARKK trades, or basically break even. So as things continued, I think then I probably got in. I'm pretty sure this is the crappy thing about Chase is you can't go and look back at all your orders. At least I haven't found an easy way to do that yet. So and I'm not tracking these that well, to be honest with you, because I'm doing so much tracking, data tracking, and studying on my day trading. I'm just kind of being very strict about following the plan and tracking my P&L. So, but if you're primarily a swing trader, I would definitely track the data a lot closer, like the way you see me track my day trades. So anyway, got back in for the break of this daily candle, got stopped out over here for another loss. And then right now the trade I'm in is for the break of this daily candle. And right now, looking pretty good. We're up like over about $7 just on my stop loss. Overall, up about $10. So either way, I'm going to be green on all these ARKK swings when this trade ends, even if it comes down and hits my stop. I am keeping my stop right now at the high of this daily candle because this is obviously a consolidation period. It wouldn't make any sense to bring it up to the bottom of any of these daily candles because this thing is just chopping around like crazy. So I am okay with it chopping around, and hopefully it eventually bounces off this area and takes off for a new high. So, and if it doesn't, if it comes down and stops me out here, that's fine too. At least I will be green on that trade and green overall on all my swing trades at that point, and will keep myself from suffering any further drawdown, which could happen just like it did over here. If that does happen, then I'll look for the next entry to get in, and my ideal scenario is that this thing breaks out above the 100 MA and then stays above it, which it's done in the past. And again, just because it did it in the past doesn't mean it's going to do it in the future, but that's why I came up with that plan. It's not just some arbitrary idea. You can see that it comes down and taps that 50 MA a little too often to use the 50 MA for the long-term swing. Back here was the last time it broke out above the 100 MA. It was at $50, and then it came back down and touched the 100 MA at $125, so that would essentially be a $75 gain per share. So pretty nice little run there, and that's what I'm hoping it does again, but who knows? This thing is pretty crazy, so I'm just playing it very safe and taking, you know, anytime that a consolidation area is broken, I'll just take my stop and take the small profit. So that's that. Hopefully this was helpful to you guys. I'm trying to be as transparent as possible and give you as much information as I learn it. And you can see down here that I also write my plans on right directly on the chart, and I follow those strictly. And that's really the main thing. That's the main message that I want to get across. No matter what happens with these stocks, what happened in the past and what may happen in the future, you should go into every trade with a strict plan. And if you get stopped out, just take it. Don't sit there and ride it out, because even in this case, even though now I'm doing pretty well in this trade, let's say that I never got out of the position that I had back here and I just rode through all this choppiness. Right now my average would be like 118, 119 basically, and right now I'm sitting with a $113 average, so I'm able to take a lot more advantage of this move. Otherwise I would only be up about $1 right now. So it's definitely better to just take those stops when these things start to go against you. Don't hold and hope. That is not a strategy for profitability. So as always, take your stop losses, honor your profit targets, and in the long run, you should be green. Take care.